This is the crypto bull run of treasury companies. First we had Michael Saylor with Bitcoin, then we had Tom Lee with Ethereum, and now we've also got a treasury company for Worldcoin. And that's why the price was rallying that much in the last days. Now the question is, how much longer can this rally last? Are we actually going to see a reversal of all of this excitement? From the beginning of September to the price top, Worldcoin appreciated by 145%. It topped out at slightly above $2 and since then fell by 21%. Here's the news. We've got HCO Holdings, ticker symbol OCTO, that announced a $250 million private placement with $20 million from Tom Lee's Bitmine to buy WLD via a treasury company. Now this rally looks great. The issue is when we zoom out a little bit, because then we get this chart here. This is Worldcoin over time. We topped out at above $11, and this here is the recent rally with the announcement of the treasury purchases. But why did Worldcoin go down that much in the first place? The reason is a very aggressive tokenomics. So people that scanned their irises, they got free WLD tokens associated with their Arbitrum account. They were able to sell those tokens. The circulating supply moved from 522 million, that was in July of 2023, to now 3.9 billion. So roughly a 6x in the span of a bit over 2 years. Of course, the investors are cashing out as well. This is not just community allocation. It's the investors. It's also the team, so the development. And a few tokens are also set in a reserve. And so really, I like to look at cryptocurrencies relative to other cryptocurrencies, not just at the price in US dollars, because the problem is when Bitcoin is going up, when Ethereum is going up, then most altcoins go up as well. But the decision whether or not to buy WLD should be made in reflection of whether or not it makes sense to buy BTC or WLD. This is direct opportunity cost. Those are assets that compete with one another, just in terms of price correlation, right? When the two things move in the same direction at the same time, we are looking for the outperformer. We don't get anything by just diversifying. If we take on more risk, we should get more return over time. Now this is WLD, the Worldcoin token, relative to Bitcoin over time. So this is now a much cleaner chart compared to just looking at the US dollar price, isn't it? I connected the bottoms over here and drew the parallel line at the top. And interestingly enough, we have topped out at a very similar level to where one would expect given those bottoms. And so now we are deflating again, despite those positive news. WLD relative to Bitcoin looks very similar to WLD relative to the others market cap. Here we still might have some upside. This is 44%. Now the others market cap is all the altcoins that are not in the top 10. So Worldcoin is included in that. So this looks at Worldcoin relative to other altcoins. How is Worldcoin doing relatively speaking? And unfortunately, this performance again isn't too great. And the reason, of course, again, is the very aggressive number of tokens expanding over time. When there's constant sell pressure, but not adequate buy pressure at the same time, we tend to see long-term underperformance. Now, how problematic is that underperformance? Let's have a look at 1 year of relative valuation. It's an underperformance of 63% roughly. Really, the Worldcoin tokenomics are at the heart of the problem. It's the reason why the price isn't doing that well. It's not necessarily the usage of the platform, even though that's not that great either. But the long-term price chart looks terrible. The long-term market cap chart does not look terrible at all. This is close to all-time highs. Yes, currently it's elevated and we might come back down again. But over time, we get higher highs. If the tokenomics weren't that aggressive, the Worldcoin price could now be at a new all-time high. It's simply just because the insiders and the investors offload so quickly. Worldcoin as a whole is a growing project over time. The market cap is going up. Yes, short term, again, we might be somewhat elevated. But year over year, things are actually going fine for the team again, not necessarily for the average retail investor that gets this performance here. Here is the total value locked of the world chain over time. So this went up because the Worldcoin price itself went up. It's currently at close to 100 million. Unfortunately, measured in Worldcoin, we are not at an all-time high. This is rather going sideways in the last 2 months. Now we have to look at this total value locked in relation to the market cap. This is 100 million versus a market cap of 3.3 billion. So the valuation is definitely not based on world chain activity. It's based on something else. In the last 24 hours, we only saw 5.9 million worth of trading volume on world chain, and that's incredibly low. Compare this, for example, with Arbitrum. Here we had 644 million, or compare this to Avalanche, 593 million, or compare this even to something like Base with 1.7 billion worth of trading volume in the last 24 hours. World chain is not used at all. It's pretty much a dead chain with those 5.9 million worth of trading volume. When there's no trading volume on a chain, it's also very hard to attract capital, because trading volume means trading fees, and trading fees go to the capital providers. If there is a lot of capital but no trading happening, it's very hard to generate return for those capital holders. Most trading volume for Worldcoin still happens on the perpetual futures, because on the spot market we only saw 200 million worth of trading volume on Binance in the last 24 hours. This is now of the WLD token. This is not the trading volume on the chain, right? On the chain we only had 5 million. On the perpetual futures though, we had 936 million worth of trading volume. So really it's the bets on the price that move the price. It's the levered short-term capital that does the short-term price discovery. Now most people, surprisingly enough, are actually betting on rising prices of Worldcoin over time. The funding rate is positive most of the time. The longs have to pay the shorts to get more exposure to rising prices of WLD, despite this long-term chart. Isn't that interesting? The open interest on Worldcoin is massive. And that's again a problem, because open interest is positively correlated with the price. When there's a lot of open interest, the price tends to be high. When there's less bets on the price on the perpetual futures, the price tends to deflate. So when the open interest here is coming down, the price should come down as well. And this is in line with being relatively high on the trading range, both versus the other altcoins, but also versus Bitcoin. The same is true for the trading volume relative to the spot price. The trading volume is extremely high right now, and there is a positive correlation between the two. When trading volume goes down, when intention goes down, then the price tends to come with it. There were many liquidations of Worldcoin with the recent price appreciation. That is coming down. The market is becoming more calm. The long-term tokenomics are very likely going to take over again. Now here's the problem with investing in this market. There's in general two major forces that impact the prices. On the one hand, we've got the macro environment. Where is Bitcoin, Ethereum and Solana going? Then on the other hand, we've got whatever happens idiosyncratically to a specific altcoin. Now the problem is most people can't make constant gains because most people aren't really segregating among those two influences. So if you're just riding the macro environment, you can just go with Bitcoin, right? You can buy whenever the current price is below the realized price. Whenever we are below the average cost basis of the market is historically the best time to buy. Of course, currently we are very far away from that. But in general, approaches like this work quite well to time the macro. Or we can even go a bit more complex. We can use things like the CBBI indicator, an indicator that aggregates all kinds of other models. And it also shows us pretty well when we are potentially expensive or potentially cheap in the market. The reason why those indicators are great for macro timing is because it tells us how much we should potentially be invested in crypto. We should have very high allocation over here, maybe 30, 40, potentially even 50% of our entire net worth in crypto. And we should have the exact opposite when we are up here, right? Maybe only 5 to 10% of our net worth in crypto. So we can always adjust based on models like this, and we can play the macro. And for the macro, we can just go with Bitcoin because Bitcoin tends to outperform most altcoins most of the time. So that's one approach to make money in crypto long term. And I think that's the most straightforward, easiest approach for people that just start out with everything. But then there's also the approach of higher risk, higher reward, of using the altcoins. But this is now the Bitcoin price that we see at the top. What we now see at the bottom, that's the altcoin market cap. And just have a look at how similar those lines look. When Bitcoin is going down, the altcoins go with it. So even if you take the best altcoin on the market, even if you figure out that the fundamentals of project A, B, and C are the best and that they are doing long-term better than the rest. If Bitcoin goes down, if Ethereum goes down, then the best altcoins go down with it. And that's the problem. There are times when everything is going up and there are times when most things come down. And it seems like the asset selection doesn't matter as much compared to timing the macro environment. But then again, we are back to just trading Bitcoin. If you want to just get macro exposure, we just might as well buy Bitcoin, buy and sell Bitcoin. So really, we want to find a way to bet on an altcoin without the macro environment. We want to neutralize the macro environment, and we just want to bet on the outperformance or the underperformance of a certain altcoin. I'd make the argument that it's actually easier to bet on the underperformance of an altcoin. Because have a look at the altcoins in the last year. Bitcoin, of course, in the last year almost doubled, and the vast majority of altcoins underperformed that, right? We've got 1, 2, 3 altcoins that did similar to Bitcoin, maybe a bit better, but the vast majority did worse than Bitcoin in the last year. And for some altcoins, that happens rather consistently. This is balancer relative to the others market cap. So how is the balancer token, a decentralized finance protocol token, doing relative to all other cryptocurrencies? And it's going down consistently. Now, the reason why this is going down is fundamentally driven, as in there's more and more tokens that hit the market over time. There's a high token inflation, or the tokenomics are not that good. Here is the balancer tokenomics over time. We started out with 20 million tokens, and now that went up all the way to 70 million tokens. And that then has this long-term underperformance as a consequence. And so I like to take advantage of market inefficiencies like this. I like to bet on falling prices of balancer relative to, for example, Bitcoin. Because then we can turn around this chart. This chart turns into this chart here. This is now Bitcoin relative to balancer. So we bet on rising prices of Bitcoin and on falling prices of balancer at the same time. And we get this return curve over the years. So in the last 12 months, this went up by 186%. It actually did outperform buying and holding Bitcoin. And that's better than any straight altcoin pick over here, right? Among the small risky alts. None of them did that performance in the last year. And I also like how constant that performance is. Compare this with the Bitcoin price, right? Bitcoin during that time did go down by 77% at one point, right? The drop from 70K all the way to 16K. This relative ratio did not have those fluctuations. Here is the logarithmic scale, and the maximum drop from top to bottom was 50%. So we are appreciating faster than buying and holding Bitcoin, and we do this with less fluctuation over time. It's a better risk to reward. That's what we all should be aiming for. More return with less volatility. I'm following this kind of strategy already for 4 years roughly. Had I just dollar cost average into Bitcoin, I would have gotten the return indicated by the gray line. But because I also bet on relative valuations, on things like balancer going down over time, I got the return indicated here as the black line. I understand it's not as straightforward as just buying an altcoin. There's a bit more complexity to it, but that's why I created dedicated videos on this. And I want to make this as easy as possible. So here's the idea. You simply watch 2 videos over here that explains the entire strategy, how to execute a relative valuation trade. Once you've watched those 2 videos, I will send you my favorite trade. So that favorite trade is very similar to the balancer token trade. It's going long Bitcoin, Ethereum, or Solana, and it's going short the altcoin that tends to go down over time. Here are the 2 videos. It's using perpetual futures to bet on relative valuations, and it's risk management with relative valuation bets. In total, it's roughly 1 hour worth of content. So just watch those 2 videos, and afterwards, after you've joined the community, I will send you my favorite trade that performs very similarly to this chart here. And so here's the offer. If you do not make any money with that trade after holding it for only 1 month, then I'll refund you the membership fee, no questions asked. So simply just send me a message. I will just refund you the $125 per month. If you do make money, of course, with that trade, then feel free to just continue copy trading me. Because I will not just share this one trade, I will of course share every trade that I do myself as well. A link to Premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in Premium. Cheers.